So section 3, and we see we've got some other account transactions, cash from sales, sold services on account, cash for expense, received cash. So we're just going to do we're just doing more transactions. So here in the book we've got, let's try to zoom in. See, I don't have enough room up here. So once again, this is more of the which side is affected. So April 10th, received cash from sales for $600. And flip back. To page 1 of the chapter. The example, received cash from sales. So we'll go ahead, label our account cash. So we received cash. So cash has the increase. It's on the left side under debit. So we'll have our increase in cash here. And it was from a sale. So we're going to create a T-chart for sales. So we had an increased sales went up because we sold something. We didn't pay anything out, so we had an increase in our sales, which is what businesses want to do. So we look here, we got a decrease, an increase. Increase is on the right side under credit, because remember, sales is part of owner's equity. So that's why it's on this side of the equation. So you got the equal sign. The sales is part of owner's equity. So increase in sales is on the right side. $600. So then our next one, I'm going to guess it's sold services on account because that's the next example in the book. Yep, sold services on account to Mr. Erickson for $850. So we've got our example, sold services on account. So that was going to be accounts receivable. That's an asset. So AR. Erickson. I know that's kind of wrote that sloppily. So that's on the asset side. We have the increase. So all assets, the increase is on the left side. So that was $850. And then it was a sale. So sales again. So we'll name our T-chart sales because it's going to be logged in under sales. We have an increase in sales. Sales is on the owner's equity side, and everything on that side of the equation is on the credit side of the T-chart. Oh, it's $850 there. And then our next one's probably going to be paid cash for something. We paid cash for rent, $250. So here this is, we paid cash for an expense. So I'll go ahead and write down, we know that it was for rent, so we'll make rent expense. And that one's going to be, our expense went up. So we're going to have our increase in our expenses because our expenses went up. You can see that's kind of a sub T of the T. This one was a little bit trickier. So our $300 or $250 are going to go here because they're on the left side. Anything that the increases for this one are going to go up on the left side. $50. So I'll write our next one down because it was cash that went out. So cash goes out, so it's a decrease. So our decreases for assets go under credit on the credit side of the T. So we had an increase in rent, decrease in cash. So then that gets us to the next one. Received cash on account from Sam, $425. So I'll do our cash. So we received the cash. Cash goes up. So any increases for assets go on the left side under the debit column, so there. And then it was an account that Sam Erickson had. He owed money he owed us, so that was an accounts receivable. So his account goes down. So I'll go over here to the book. So we had a decrease. So this decrease is going to go under the cash, under the credit side of his AR account. That. And the last one, we're about running out of time here. I'll go ahead and fill that one in real quick. Paid cash to owner for personal use. So we got Kathy's drawing account. So whenever the owner takes out money, it's a drawing account. $300, sorry. So that goes on the left because that went up because money went into her pocket, and then cash goes down on the right.